Amendment to the discussion draft offered by Mr. Markey of Massachusetts.
Without objection, the reading of the amendment is dispensed with, and the gentleman from Massachusetts is recognized for 5 minutes in support of his amendment.
This amendment is very simple. It says that if a publicly traded company has received a letter from a stock exchange warning that it will be delisted from the stock exchange because it is trading at too low a price to comply with the exchange's listing standards, that company cannot get a loan guarantee from the Department of Energy unless its stock price recovers. Now, this will remove companies whose stocks are in danger of being tossed out of the New York Stock Exchange or the NASDAQ or from eligibility as a result for loan guarantees under this program. Now, why do we need such a provision, you ask? Well, because these listing standards are an important measure of the financial health of a company. Under the New York Stock Exchange and NASDAQ's rules, if a company's stock plunges below $1 per share, the New York Stock Exchange or the NASDAQ can delist it, which essentially turns it into a penny stock. Delisting, in other words, is clear, it's objective evidence that a company has fallen into a financial death spiral. That makes giving a taxpayer loan guarantee to such a company a highly risky proposition. Now, some of you might think that this is a hypothetical scenario, and I sincerely wish that it was a hypothetical. But the reality is that one of the loan guarantee applications that is pending before the Department of Energy, and which is not precluded by this legislation, is for the United States Enrichment Corporation. After Congress privatized the United States Enrichment Corporation in 1996, we quickly learned that it couldn't survive in the private sector without continued and repeated bailouts to the tune of billions of dollars. We've given it free centrifuge technology. We've given it free uranium that it enriches and then sells at below market prices, undercutting its competitors. We've paid to clean up its radioactive messes. We've assumed its liabilities. And what has happened after all of that taxpayer investment in this corporation? Well, the entire company's market value is now barely over $100 million, even though the Department of Energy has given it a $132 million bailout. Even after the Department of Energy's recent announcement of another gift of free uranium for the United States Enrichment Corporation, Standard & Poor's downgraded it to junk bond status. I have to repeat that. It's so important. Standard & Poor's has downgraded the United States Enrichment Corporation to junk bond status. And yes, this company was warned in mid-May that it may be delisted from the New York Stock Exchange and become a penny stock. Let me say that again. This company was warned in mid-May that it may be delisted from the New York Stock Exchange and become a penny stock. This, as Standard & Poor's has downgraded it to junk bond status. So here is what the United States Enrichment Corporation told its investors about its delisting risk. Quote, our failure, this is from the United States Enrichment Corporation, our failure to maintain compliance with the listing requirements of the New York Stock Exchange could result in a delisting of our common stock, which could require us to repurchase our convertible notes for cash and trigger a default under our credit facility. That's from the United States Enrichment Corporation. You'd think that we'd have all the information we need to stop throwing good money after bad, but no such luck. The United States Enrichment Corporation's loan guarantee is still pending before the Department, and the $130 million in taxpayer bailouts that it has recently received are intended to be used to fix their broken centrifuges so that the loan guarantee can proceed. And what's more, last year, a number of members of Congress wrote the Energy Secretary and the White House Office of Management and Budget, urging them to quickly approve the United States Enrichment Corporation loan guarantee and to provide favorable loan terms. We may not agree on much when it comes to loan guarantees, but surely we can agree about the United States Enrichment Corporation. If anything meets the criteria of a no more Solyndras bill, it must be this corporation. If you're not thinking about the United States Enrichment Corporation, what could you be thinking about? If this isn't on a precipice, ready to collapse and take all of this taxpayer guaranteed money with it, what else would be? So my amendment just says that, that companies like this are included in the bill so that we protect against taxpayer losses in an area where we already can see that it's almost inevitable that that money will be lost. If we had known about Solyndra and the Chinese $30 billion investment in the market when that loan guarantee had been given out, we probably would have taken a different look at it. Who knew what the Chinese were going to do to the market? But that's hindsight. You know, you live life forwards, but you understand it backwards. That's looking at Solyndra or something else. Here, we can see the United States Enrichment Corporation right now. We can see what the danger is right now. The Markey Amendment says protect the taxpayers at all costs against this inevitable loss. I urge an aye vote.
Gentleman's time has expired. The chair will recognize